Chicks embalmed in the earnings buffet. Halos hang off congressional chains. They baptize the bid and cleanse the gains. Wait, the uninvited algorithm choir trade our faith for expired desire. Candles burn in brokerage pews while profits front run breaking news.
Transparency's a feature they grin as opacity caches their sin.
Spin, spin, little trader, spin. They dance on the data you'll never get in. Sell the rumor, confess the trend. We're the liquidity they pretend. Spin, spin, darling sin. The house knows the song before it begins. They built cathedrals of quarterly lies, where senators tied through dark supply portfolio psalms, insider hymns, ethics dissolve in derivatives rims. I caught confession inside a 10K, a loophole halo tucked away. They legislate their lock-in code, then sell us virtue over the counter road.
Every heartbeat's just an index ping. Every soul's a liquidity string. We aren't investors, we're incense smoke, perfuming the fraud till the bubble broke.
Spin, spin, little trader, spin. They front run the truth and call it a win. Charge your losses like holy men, 'cause fairness don't trade in the citizen. Spin, spin, darling sin. Every audit ends where they begin. We drew our dreams on a candlestick graph while they drafted bills in a champagne bath. Justice delayed, dividends divine. The ticker tick tocks like borrowed time. A balance sheet cross, a profit crown. They had salvation while we drown. This ain't corruption, it's choreography. A ballroom floor of hypocrisy.
Spin, spin, little trader, spin. Confess your loss, absolve their sin. You pray for green, they sell the red, and call it freedom while you're misled.
Spin, spin, darling sin. Every faith folds where power's been.
The market's free for those who own the key.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt Kohrs, and you folks are the show. It is a beautiful Tuesday, November the 25th, and I've had a couple cups of coffee. I'm very excited. I'm very ready for the day. We're basically going to see, is the pump from yesterday the real thing? Is it the real McCoy? Did the bull save the market? Are we getting the Santa Claus rally? Or was it run-of-the-mill mean reversion? We pop back up to some averages, we fail from here, and vomit into the big turkey day. We will find out. Obviously, if I was clairvoyant, if I could tell the future, I would let you guys know where this is going. But alas, No one can predict the market, but what we can do is read some of the tea leaves. We could read the room. We could see the writing on the wall to see what might be a statistically more likely pathway, and that's exactly what we're going to be doing today. Of course, we're going to be getting into the nitty-gritty of some exciting equity news. Nvidia, Google, Zoom had earnings, Baba had earnings. We're going to talk about that. But before that, we should probably talk a little bit about the major news. We got some PPI this morning. We got some retail sales this morning. Tomorrow we're getting GDP and PCE. So lots of jobs and I guess macroeconomic data today, and also tomorrow we're going to be getting into that. We have some breaking global political news. Ukraine agreeing to, I suppose, the 28 proposal to end the conflict with Russia. So that came out around 7:30 this morning. A little pop in the market there. We got some jobs data and other stuff at 8:30 this morning. We're going to be going over that. We have some news between U.S. and China and I guess quote unquote pressure with relation to Taiwan. And then of course we're going to be talking about really some of the Black Friday deals. Shout out to Public. Shout out to TradingView. Shout out to Take Profit Trader, TPT. We got some of those guys rocking today, pinned to the top of chat in the description of the video. We're going to be looking at some key levels of breakouts and breakdowns. We're going to be looking at some options flow. We're going to do a little bit of a nerdy discussion on the texture of volatility and what's going on with the vol surface there. We have a lot to talk about, a lot to chit chat about. But first of all, and most importantly, the fact that you guys are here at the crack of dawn. Folks, it is 9:02 in the morning. The world's not up yet. We are up before everyone else because we're that degenerate when it comes to the world's largest casino, aka the old markets. So the fact that you guys are here before the sun is up, before the birds are up, before the farmers are even in the field, I would just like to say thank you. I hope you had a great day yesterday. I hope you're ready for another great day today. And let's see if we can make a little bit of moolah. Stock futures slip led by Nvidia a day after tech fuel rally. So yes, we got to talk about the overall market. We got to talk about Nvidia. We got to talk about Meta. We got to talk about Alphabet, aka Google. But we also have some other things to get into. So there's actually a lot of moving parts this morning. So just so you can see, the SPY is pretty much at its closing value from yesterday. The Qs are slightly below their closing value from yesterday. Avago, which was one of the biggest gainers on my watch list yesterday, looking very, very good, gaining an additional 3.6% this morning. And then Google, after gaining 6.3% yesterday, is up another 3.7%. So these are two of the high flyers, but they're not the only two. Tesla also looking pretty decent, technically not as good as those other ones in the short term, but also still looking good. And then right now, as you saw, Nvidia taking a bit of a beating. So the world's number one stock, after gaining 2% yesterday, down 4.5%. So yes, we will be getting into all of this. And right now it's a giant question mark. And I want to get into that. But first, let's take a step back and look at the bigger picture of what in the world is going on. And it was around 7:30 this morning. We got a big piece of breaking news. Breaking. Ukraine has agreed to the full terms of President Trump's peace plan to end the war with Russia. Little round of applause. My question to you, and we talked about this a little bit ago, and I don't mean this rhetorically, like I legitimately want your answer here. How many conflicts does Trump have to end before he gets the Nobel Peace Prize? And I'm not necessarily saying that his efforts are the best in the world for everything going on, because there's crazy stuff going on in the world. But I'm saying if we're using the relative measure of back when they gave President Obama the Nobel Peace Prize, no one can really name why he got it. It was almost like seemingly a DEI initiative from that committee to give it to him just because he was a transformational character within U.S. history. I'm not necessarily saying good for bad, but he was obviously transformational. So it seems like they also just wanted to beef up his resume by giving him that award. So if we're using that as the generic standard, when none of us can really name what happened there, my question to you is, legitimately, if Russia and Ukraine, if this just stops and they figure it out, shouldn't that mean that also Trump gets it? I don't know. I'm just here to ask the question. So that was a piece of breaking news this morning, but it was the only piece because a little bit after that, we got retail sales, we got PPI, and we're going to get consumer confidence at 10 a.m. So as you can see, retail sales coming in at expectations. PPI, the producer price index, probably the least important of all of the inflation numbers, but still important, coming in at expectation. And retail sales, not counting core, but retail sales month over month, a little less than expected. In all reality, when this came out at 8:30, the market didn't move much. In fact, the market moved more from the report of the whole Ukraine-Russia thing than it did from this. But I do want to let you know, 10 a.m. today, 30 minutes into the trading session, right when we're at that 30-minute orbo, we are getting consumer confidence, so don't be surprised in the short term if the market moves from that. Fast forwarding to tomorrow, just so you know, early in the morning before the market opens, durable goods, GDP, initial jobless claims, all coming out. 30 minutes into the trading day, we are also getting the PCE number. So today, tomorrow, lots of macroeconomic reports. Please pay attention to it. Market is closed on Thursday in observation of Turkey Day, aka Thanksgiving. Friday, the market is going to be boring as all heck, but technically open for a half day, does close at 1 p.m. So please pay attention to those events. They will have a direct impact on the market. Speaking of which, we're right now questioning, are we recovering? This is a look at the S&P 500, which gained a scorching 1.55% yesterday, a very good day, and the NASDAQ really ripped it yesterday, gaining over 2.5%. But as you can see, this is just a reversion into the exponential moving averages. You could argue that this, at this moment in time, was a mean reverting setup, as in we were above it, we got pushed down. We were above it, we got pushed down. We overshot it, and we now push back up. I covered this in more detail in the update video yesterday. We are not necessarily out of the woods. Of course, the way we overshot this drop and kept going, that could happen. And we could keep going. And yes, there's an upside gap fill to 6829. If you are bullish on a swing perspective, that's probably a reasonable target after we get this breakout of 6770. So I just want to let you know, neither the bull camp nor the bear camp should be feeling that comfortable right now. Yes, this is a decent recovery. I mean, heck, we bounced 175 points. That's a legitimate bounce. But if you look at the daily chart, if you look at the 4-hour chart, if you look at the 4-hour chart, we are not necessarily out of the woods. This is mean reversion. If it keeps going, I will be more, I guess, supportive of the momentum follow through for the bull case. However, if we start to crack yesterday's low today, if we take out 6630 on the SPY, if we end up taking out 66159 on the Qs, if we take out 59516, this might be a rejection from just equilibrium, and then we're coming back down to the low that we saw on Friday. So I just want to put that out there. Whether you're in the bull camp or the bear camp, we're kind of in treacherous waters, and I would argue that neither side should feel that comfortable, especially when you realize that the gamma context, this right here is the gamma chart, the stability is very, very low. I know this is small text. It says 18%. There's negative gamma above all the way up to 6760. There's negative gamma all the way below. I mean, I could scroll out here. That's just basically all deeply red. I mean, the next gamma support is at 6,500. That's a lot of negative gamma beneath. If we start to crack 6,680, the bottom of this transition zone, I would say there's a real shot of us going down to 6,600. But with that in mind, obviously on the flip side, if we crack 6,715, real shot, we go up to 6,750. That's exactly where you're going to see some of this positive gamma. There's a little bit of a node right here. And then past that, you're talking 6,800. So at this moment, I just want to be very clear. I don't think you should be married to either bias because there's just so much negative gamma, and whichever way we get trending, we can just really get trending. But also that brings up the fair question. What in the world happened yesterday? Why did we have such a good recovery? Well, part of it was because at this moment, because there's so much negative gamma and some liquidity problems, that means that whenever we get going in either direction, we can really get going. We have a very slippery price action surface, and we did actually get some good news yesterday. Fed Chair Powell's allies provide opening for December rate cut. A divided committee, missing data, and a whiff of stagflation leave Powell to choose between two paths, each with drawbacks. So if you paid attention to the commentary from Williams, from Waller, from Mirren, from Daly, it seems as if we are now getting the rate cut. And at this moment in time, there's an 86% chance, according to Kohrs, of a 25 bips rate cut in that December meeting. But this is a very different tune from November 20th. So in the past 5 calendar days, that's a big change. Heading into this craziness right in here, there wasn't that good of an idea that we were going to get the rate cut. And then all of a sudden, look at Thursday, November the 20th, look exactly where this started to switch on the 21st, which is perfectly aligned where we started to get this bounce. So the market is now basically pricing in cheaper capital and a 25 bips rate cut in the December meeting. And it's not just call sheet, it is also Polymarket. They're putting it at an 86% chance. And we saw the exact flip, and this really got going. We always knew Mirren was going to be like rate cut, rate cut, rate cut, because he was basically put into his position recently from Trump himself. But then from that, the fact that John Williams, the New York Fed president, also came out, surprise, surprise, right on Friday. Yeah, he commentary early in the morning, it was like a 7:30 speech, started to bounce. Well, a little wick on that day, we started to bounce and then got going even more. So whether maybe this is causation, correlation argument, but I'm just saying, as soon as the market said, yes, we are getting a 25 bips rate cut, that's exactly when we stopped the sell-off. And at this point in time, got the bounce to mean reversion territory. We are at the exponential moving averages. That's this colorized box, obviously going from bullish to bearish. But if it keeps going, it could easily switch back bullish. However, if we just get rejected out of here and sweep yesterday's low, if that happens today or tomorrow, well, guess what? We're going back down to the bottom of the box. And overall, when I'm saying this over the larger box, it's the entire range that we had on Thursday. I mean, we're talking the range of 6,771 all the way down to 6,532. We moved 240 points in a singular day, and that is 100% possible again today. Once again, pretty much in either direction. I'm trying to make it very clear that I personally don't have a bias right now. I guess the fact that the cloud's a bit red, maybe I'm leaning a little bit bearish, but overall, I fully admit that this could go up to 6,500 or 6,800, maybe 6,750, 60 today, because that's the next time you're going to see this positive gamma. And then other than that, if we start to crack, there's this hedge wall at 6,680. If that doesn't hold, I mean, the next time you see a positive node is all the way down at 6,500. So what I'm really trying to drive home today is just be prepared for large ranges. Be prepared for big swings. This is the time, as it's been for the past week or two, to size down and really stick to your risk. All right, just because we're talking about that global news as well, Xi puts biggest U.S.-China flashpoint back on the agenda in the Trump call. So we were told from the Treasury Secretary Bessent that maybe by Thanksgiving they will ink the trade deal between the U.S. and China, I guess, representatives. But right now there's a little bit of hey, what's happening with Taiwan? So that's throwing a little bit of a wrench into the situation. Not necessarily the worst thing ever, but maybe just something to pay attention to. Now, really honing in on individual companies, we're not really in, we kind of are, but we're kind of not in earnings season. But anyway, we heard from Zoom last night. They did do well. Alibaba this morning, more on them in a second. And after the market closes today, Dell, and tomorrow morning before the market opens, you might care about John Deere. Alibaba shares rise on AI drives 34% cloud sales jump. So Alibaba, BA, it is up in pre-market trading. They're doing well in the world of tech. So obviously kind of keeping going with the overall trend. But that's not the big news. The big news is what in the world is going on with Meta, Alphabet, aka Google, and Nvidia. Nvidia shares drop on report of Google challenge in the AI chips. Nvidia shares fall 3% on report Meta will use Google AI chips. The information reported that Meta is considering using Google's tensor processing units, the TPUs, in the data centers in 2027. Shares of Nvidia were 3% lower in pre-market trading, basically just a revenue hit to Nvidia and a revenue boost to Google. And that's exactly why right now you're seeing Nvidia go down and Google go up. So that's pretty much the big news in individual equities. Alphabet's AI chips, Gemini model position it to rival NVIDIA. So not only are they selling some more chips, but apparently their model is becoming, at this moment in time, potentially one of the best ones. So right now, Google is very much just going and going and going, just a succession of phenomenal news. And even in the face of the market looking a little bit suspect, Google is continuing to pump to new all-time highs. Lots of excitement in Google. And then the question is, will this be enough to get Meta out of its rut, gain 3% 1% yesterday, up another 1.8% right now. And in these pretty serious pullbacks, I mean, it's not fun to deal with in the real time, but Meta does nicely come back. So who knows? This might be a dip buy opportunity. Obviously, time will tell. Alphabet's AI chips Gemini model position it to rival NVIDIA, the hot individual equity news of the day, which actually is getting so crazy that Google is probably going to leapfrog Apple today. NVIDIA is the world's most valuable company based on market cap, coming in at $4.436 trillion. As of market close, Apple just above 4 trillion, but based on how things go, Google yesterday already leapfrogged Microsoft and actually recently leapfrogged Amazon as well. So Google passing Amazon, passing Microsoft. Now it's in third. Good shot that it actually becomes the world's second most valuable company today. Obviously, then the only one less would be NVIDIA. So please keep that in context. Like, this is a big deal.
So these would be TPUs, apparently, Tom, as opposed to NVIDIA's GPUs. How are they different? Are they better for the likes of inferencing, for example?
Yeah, so they were developed in-house by Alphabet, the parent company of Google, about 10 years ago, and they have since been adapted, and they can continue to be adapted because, of course, Google, as well as having its own chips, also has its own large language model, Gemini, of course. So there's this feedback loop between how the model performs. Then the developers can take that to the engineers of the chip and adjust the chip to add in those performance changes that they may need. In terms of whether or not it's better or not, it kind of depends what your specific aims are when you're one of these AI researchers building one of these models. But certainly it seems to be meeting the needs, certainly not just, it seems, of Meta, at least that's the expectation according to this reporting from the information. We know it is meeting the needs of Anthropic, and they think that's going to work because Anthropic is committed to a deal with Google as well about being supplied with close to 1 million of these TPUs. The key standout point, Vonnie, obviously, is that it seems that Alphabet, with these partnerships with Anthropic and potentially this partnership with Meta, one of the biggest spenders, hyperscaler spenders on AI chips, it seems that Alphabet is being better positioned with its TPUs as being potentially a bit of a competitive threat to NVIDIA, which essentially has dominated the market for these chips.
Yeah, exactly. So what would switching look like in this arena? I mean, is there an incentive on price? Do we know anything about how relative pricing, relative margins would be?
Well, they can work very well in terms of both training the models, but also inference. And it seems to be that is what the emphasis is for Meta in this potential deal, is they want to be able to use these chips for inference. So when we and consumers and enterprise are actually using these chatbots and these large language models, that is the process of inference, and TPUs work very well in that sphere as well. They do have to, and they will have to prove that they can meet both in terms of energy efficiency and in terms of cost as well, of course. And look, Jensen Huang and NVIDIA has been very keen to emphasize that with each new iteration of his own chips and the whole package that comes with it, so the CUDA software, but also the networking that comes with those NVIDIA chips, that you get those gains in efficiency, both on energy and on cost as well. And the latest, of course, generation of NVIDIA chips will be coming, the Rubin will be coming out in 2026, and he says there's already strong demand for that. So this is heating up competition, but in some ways it's also a reminder this is just as much Alphabet's world as it is NVIDIA's world, because not only are they performing and getting demand for their chips, they're also getting demand for Gemini 3, which of course dropped a few days ago and has had very good response, and you've seen that impact in terms of the competitive challenge versus OpenAI, and you've seen the read across to what is essentially a proxy node now for OpenAI, which is SoftBank, listed over in Japan, which has this sizable stake in OpenAI, and its shares have been under pressure. So that has SoftBank's become something of a proxy for the privately held, of course, OpenAI, and concerns that maybe OpenAI is facing more of a competitive threat from Gemini, and particularly Gemini 3.
All right, there you have it. Some of the hottest news of Google kind of coming out of left field, but obviously doing very, very well. So that's why Google continues to rip to new record highs, potentially becoming the world's second most valuable company today, bringing Meta a little bit with it and putting more downward pressure on NVIDIA, which, coming back to that cloud discussion, lots of strong momentum, reverts, bounces, reverts, bounces. Now the question is this thing starting to fail? Obviously, watching this low from Friday of last week at 172.93. If that cracks, you have another low at 168, and then there's big support at 164. So I'd be watching that closely on NVDA. I guess while we're here, Google, this is an open range breakout. That's a brand new all-time high in pre-market trading. So all you could pay attention to are these downside gap fills. Avago also gapping up to a new all-time high. Once again, watch for the downside gap fill, but new record high. Tesla right in its cloud. So the question is this a double bottom support? You could be confident of that if we start to break 429. However, we break 401, I'd be watching once again for 382. Looking at Palantir, it is below the cloud. Right now, we did find major support around 150, but just be careful. This might just be a lower high. If we end up cracking 157, you might want to be watching 150 once again. We haven't spoken about Bitcoin yet today. Look at momentum is very bad. Lower highs, lower lows. We did have 2 green days. Really the weekend was quiet. Saturday, Sunday, Monday, kind of quiet. Right now showing a little bit of red. It gets problematic if we crack 84,000 again, but there might be a little bit of relief if we get back above 90,000. Which is really in a certain way talking about MSTR. Had a little bit of relief yesterday with the overall market, did end up gaining 5%. It lost 3% in pre-market trading. Once again, if it goes below 166, that's problematic. If we do get this breakout, I'd be watching closer to 200. We already spoke on Meta. Microsoft, the one losing the bronze place medal in the world most valuable market cap companies, under a little bit of pressure this morning. You're either looking for the recovery of 179 and a push up to 490, maybe 500. However, if it loses 468, well, then you're probably talking 460, potentially followed by 450. Apple, actually looking pretty good, hitting an all-time high. Even though Google's like leapfrogging this stuff, Apple's no schlub. It pretty much hit an all-time high. It just so happens that Google is outperforming it. So it's not like Apple's falling like Microsoft. It just happens that Google's doing very, very well. AMD, it is below the cloud. There is a downside gap fill to pretty much 170, 171. Please be mindful of that. We do have these lower highs. We have lower lows. There is this downside gap fill to the high from Friday, October the 3rd. Into the world of quantum computing, there was a nice bounce yesterday against me. I do have puts, but overall the momentum is still down, so I'm looking for it to crack. Actually, I'll move those up. I am looking for this to crack as well. Iron. So all these are trying to save themselves from a true change of trend. One of the biggest gainers on my watch list yesterday was Rumble, RUM. We were talking about how right now there's a huge increase in shorts betting against this one. So it is a viable short squeeze play. But remember, just because someone's short, that doesn't mean it's going to squeeze. That's adding gasoline, but someone still has to light the match. But what I do want to point out is this was a bearish trend. And right now, as of this morning, we might be testing the trend reversal, so probably worthwhile to pay attention to. SoFi also trying to save itself. Amazon also trying to save itself. A lot of things right now got hit late last week, and we're simply reverting back to the mean, like the mean reversion, the exponential moving average. So this is going to be, today and tomorrow are going to be very, very telling days, because we're either going to get above and hold above the cloud, or we bounced into the cloud already and we're going to get rejected from there. And if you're trying to predict which one happens first, hey, best of luck, but I would say it's way easier just to pay attention to what happens and then play it from there. Robinhood, it's bearish right now. CoreWeave getting hit. Oracle getting hit, still has a downside gap fill to 180. Oklo getting hit. Coin getting hit. Hut trying to recover. Netflix getting hit. Open right at its equilibrium. We're either going to be breaking above 8 and 9, or we're breaking back below 6. IONQ, a nice reversion yesterday, but overall still bearish. BITX, that's just the leveraged Bitcoin ETF. DJT looking very bearish. Texas Roadhouse, kind of just in its equilibrium, trying to recover right here. Might be a classic double bottom around 155, 156. I would love for it to break back above 180. XRP, nice bounce yesterday, but overall still bearish. Solana, decent bounce yesterday, still bearish. Ethereum still bearish, even though it had a decent bounce. Oil trading at 57, hasn't really moved a whole heck of a lot. Bonds, TLT, this is the 20-year bond ETF, trying to recover, getting a little bit more bullish. And remember, bond prices go up as yields go down. And as I pointed out on Kohrs and Poly Market, they are expecting some cuts. All right, now specifically today, These are the key levels I'll be paying attention to. We are currently trading at 6698. We are opening up at 6,700, a key technical level, a key psychological level, and it just so happens that there's also a straddle here today. Someone sold puts and sold calls, so they are basically just betting on some sort of actual movement away from here. So we're going to be finding out very, very soon. But once again, we are opening up at a positive gamma node, so we are literally going to be opening at a key level, and that's going to be telling. So in my book, we're opening right around here. We're either going to have the bull step in, they're going to push 715, and that really does set up a legitimate shot to the next major positive gamma node around 6750. However, if that is not what happens, if the bull case does not play out, I would then be looking for the first major test of 6680, which happens to be this hedge wall, and below that is where the gamma gets very, very negative. Stability is very low this morning, 15%. So in the bear case, we'd be pushing to the bottom of this transition zone, which also would roughly align with the 10-minute 50 EMA on SPX. If that does not hold, I would expect a little bit of a hiccup at 6650, but in all reality, I would be looking for the test of yesterday's low at 6630. So in my book, it's as simple as this. Out of the gate, you're looking for the bulls to get above and hold 6715. If you're bearish, you're looking for the market to push below 6680 and to hold below it. So that's the bull case, that's the bear case, and obviously we're going to hear it's the if-then statement. If this happens, then we're looking to do that. If that happens, then we're looking to do this. So the if-then statement is above 6715 or below 6680, and obviously these are going to be my key levels of the day. As I always do, hang on, I don't want that one here. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white line. The white box is the transition zone, and then all these yellow, horizontal lines are the key gamma levels where we see big money positioned at the morning. So when we get there, could act as support or resistance, could act as almost like a Mario Kart speed up type of a situation. But this is just where we see big money position as of market open. And obviously the situation is dynamic and it changes throughout the day. We don't have any of this data yet because the market is not yet open. It opens in 2 minutes and some change. But obviously we will be tracking the options flow throughout the day. And then we're also going to have the opportunity to track what the big players are doing in the New York Stock Exchange. Both Friday and Monday, they were buyers. Thursday, they were net sellers. So selling, a little bit of buying, more buying. So let's see what plays out today. Obviously, we're going to be tracking this all in real time. We have a couple minutes to go until the market opens. So this is a perfect point for me to remind you that the opening bell is brought to you by Public. They are the stream partner today. If you're not on Public, get on Public. It is my favorite place to trade options. If you're an option trader or aspiring option trader, you're going to want to be on Public. And the argument for this is so simple. It's the only brokerage I know of that gives you a rebate whenever you trade options. If you are watching this and you're an options trader, want to be an options trader, whatever it is, there is no reason for you to not be trying Public. I mean, the upside is just too good. There are no commission fees on stocks and ETFs. There are no per contract fees, and you earn a rebate every single time you trade a contract. It doesn't matter if it's call or put. Doesn't matter if you're buying or selling. You're going to get a rebate on both. If you're doing complex strategies like iron condors, you're getting even more rebates. And then from there, yes, they have stock trading, no payment for order flow. They have retirement accounts, high yield accounts. You could trade bonds. They have some of the best UI, UX in the game for retail traders to trade bonds. They have crypto trading. It's a one-stop shop. They now have an AI system to build out your own trading portfolio. Very, very cool. It is free for you to download. It is free for you to sign up. It is free for you to check out. So there's no risk for you to see if this is for you. Use the link pinned to the top of chat in the description of the video because the rebate is kind of a tier system. You're going to start out at a higher tier by using that link. So pinned to the top of chat in the description of the video, use that link. Higher tier, and then when you get in, you're going to realize why I like this brokerage so much, and there's a good reason why we've been partnered up with them for almost 3 years now. It's just the best place, in my humble opinion, to be an options trader. So show them a little bit of love, pinned to the top of chat in the description of the video. And let me hide that for a second. Let's get ready for market open. Shout out to Public as always. We're going to be watching NVIDIA and Google out of the gate. We are opening slightly below the closing value from yesterday. SPY closed at 668.73. We are just below it. And the Qs closed at 605.16. And we are actually, wow, $1.50 below it, $1.60 below it. So tech sector having a little bit of an issue, while the SPY is holding on a little bit better. But obviously, with the craziness of market open, let's see how this all plays out. I myself am not trying to do anything crazy at market open, just because we have low stability. I'm expecting higher ranges, and we have the consumer confidence report coming out at 10 a.m. So I don't really feel a special need to really rush anything or anything in that nature. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, so the SPY literally opening at the closing value, which happens to be this key level of 6,700. I'm telling you, this is going to be the first watch of the day. Do we get above yesterday's high, 6,715, key level? It is a pivot level. It is a gamma level. Watch that for the bull case. And then on the flip side, for the bear case, look for a break below 6,680. That's your bull case. That's your bear case. And let's see who ends up actually winning this one. And until then, we're kind of in that awkward transition zone. I also did mark out the overnight trading session high and low on NQ, and we're about to snap it to the low side. So we're about to take out this pre-market low. So tech out of the gate is leading us lower. Let's see if this is a little fake out. We're about to crack it right now. So we just took out. Why did the alert not go off? All right, I have an alert set, but I guess it didn't want to let me know. Oh, wait. I got it on my phone, but it didn't play the audio. Did you guys hear anything? Was it just me? We did crack it, and my phone got the alert because I set the alert for breaking the box, but I didn't hear anything, so maybe they're going to just be a little bit delayed today or something. But anyway, that's always a strong play. When you look at the overnight trading session in NQ and ES, the extremes of those are very commonly taken out. I'm talking 85. Wow, that was really late. NQ 10-minute exiting. That was a little late to the party there, brother. Little late to, there we go. The alerts, they're going off on my phone. They're just not giving us the audio feedback anytime soon, I suppose. All right, so we're waiting for that. As of right now, the 5-minute is questionable, the 10-minute is bullish, the 30-minute is bullish, and the 4-hour is questionable. 5-minute on the NQ is breaking down, 10-minute is breaking down, 30-minute is testing as we speak, and the 4-hour is questionable. So the overall market, as in the S&P 500, as of this moment, is looking a bit stronger than the tech sector. Obviously, that can change, and especially when we have geopolitical announcements today. We probably have Fed members talking today. We have consumer confidence at 10 a.m. There's a lot of time left in the game, but based on the first 2 minutes worth of information, things are looking strong in the overall market and looking relatively weak in the tech sector. Nvidia and Google are both taking a hit this morning, but to be fair, Google's still green on the day. Right here, it's up 0.6%. Nvidia is down 4.7%. If Nvidia vomits, there's a chance it drags a lot of these other names with it. We are pushing that low from Friday, November the 21st. That is at 173, technically high 172s. Watch that. Maybe we bounce from there. There is an upside gap fill to 176.48. You could see it right here. That is the low from yesterday. So I'm looking either for the upside gap fill or for the crack of Friday's low, which would then set up a flush to just below 170, technically 168.41. Bitcoin is chilling at 87. Google's trying to stay green. It does have that downside gap fill to yesterday's high. Avago already got its downside gap fill to yesterday's high. Tesla is in no man's land. Nvidia is cracking. Nvidia is dragging the tech sector with it, so it must be the rest of the world that's looking fine right now because the SPY is actually green. So the S&P 500, which yes has a lot of these tech names in it, but it has other names. So I'm assuming energy sector is looking good, financial sector is looking good, and healthcare is looking good. So the fact that energy, healthcare, and financials are all pumping is why the SPY is going up, but the NASDAQ isn't. So Nvidia is dragging both down, and you're seeing the impact of that more so in the NASDAQ, and then the other names within the S&P 500, energy, financials, and healthcare are going the completely opposite way, which is why you're seeing the SPY go up right now. So let's see. I mean, Nvidia, it could recover and then everything recovers, or it could vomit. And then if energy, financial, and healthcare also get cracked, we could look at consumer discretionary, consumer staples. Yeah, consumer discretionary is also looking good. How's Walmart looking? It's fine. It's green. Target, how is Target looking? Target's slightly green on the day. How is ExxonMobil looking? Energy's trying to recover a little bit. How's JP Morgan looking? All right, a little green on the day. So yeah, financials, energy, healthcare, and what about real estate? Real estate is also slightly up. Industrials are also up. So pretty much everything is up except for tech. And it just so happens that tech is the most influential one. So that's why you're seeing the Qs under some pressure in the tech sector. But the reason the SPY's up is because every other subsector is actually looking pretty decent as of this moment. So it's shaping up to be kind of a crazy, interesting day. All right, let's get the options flow. Let's see what's going on here. Out of the gate, the S&P 500 is long and strong. The Mag 7 is just flat. So you're seeing people are loving the S&P 500. It's a lot of put selling. No one is touching calls, which tells me be careful. The S&P 500 is going up right now, not because of bullishness. People aren't YOLOing into zero DTE calls. It's a lack of bearishness. They are selling puts. That is a key distinction in my mind. And then looking at the Mag 7, it's just choppy, messy, sideways, no real trend there. So I would say that even though we're coming up, I would not be a person arbitrarily chasing this because we're coming up to a key level of resistance, which means you're taking on the most risk possible because we're as far away from risk as you could be. And as of this moment, this is just put selling. This is not people trying to be bullish and get it to push right here. If it were, we would see the green line really starting to spike. And maybe that happens in a minute. Maybe it happens in 5 minutes. Maybe it doesn't happen at all. All I can do is comment on the first 6 minutes worth of information and let you know people are selling puts. They are not buying calls. They are clearly not buying calls. So I would be hesitant to chase this. On top of the fact that the Mag 7 isn't really trending and I'm seeing weakness in the tech sector, this is that moment to just wait. I will be that friendly neighborhood reminder of you don't need to be rushing your trades right out of the gate. Right now, we're having a mismatch of information. Yes, the SPY is going up, but it's put selling. It's not call buying. The tech sector is uniquely weak. NVIDIA is on the edge of a technical breakdown. And Google, which was leading things higher, it did get hit. It's recovering. Is it going to keep recovering or is it going to turn here the way NVIDIA did? So we have a lot of things to pay attention to, a lot of things to question. And don't forget, consumer confidence is coming out at 10 a.m. So you might want to wait just to see how the market reacts to that. Of course, I guess if you're like, nope, we're just going to get rejected here, you could take this short. Just be good with your risk. Just risk whatever this high is. If you're trying to take this breakdown, if you're very bearish, maybe you're right. 50-50 shot. All I'm telling you is just be very respectful of your risks. If you're wrong, just admit you're wrong and move on. I don't really necessarily like the short at this exact moment. I'd prefer that the 5 minute and the 10 minute and the 30 minute breakdown. See this difference right here on the S&P 500. 5 minute, 10 minute, 30 minute are all bullish. If you look at the NASDAQ, 5 minute, 10 minute are bearish, and the 30 minute is testing a legitimate breakdown. That's a mismatch in my mind. There's a high correlation between the S&P 500 and the NASDAQ, and right now the fact that the S&P 500 is being bullish and the NASDAQ is being bearish, that can't persist forever. One of them is right, one of them is wrong, and instead of trying to predict who's right and who's wrong, you have the other option of literally just waiting and seeing who's right and who's wrong. You don't need to rush this whatsoever. It is, as a trader, especially a day trader, scalp trader, swing trader, your life is going to be far easier if you're trading in the direction of the current trend for whatever time frame you care about. And then it's going to be even easier if the S&P 500 and the NASDAQ are telling you the same thing, just because of obviously their overlapping influence. If you look at the Venn diagram of the individual equities that are weighted in the S&P 500 and the NASDAQ, there's a big overlap. So even though there's a big overlap, when they're doing the opposite thing, that tells you that maybe something's a little bit funky and it's just time to wait. It's okay to not be trading and ripping it. If anything, it's better to be absurdly patient, wait for that A+ setup and then take your shots there, rather than just like taking a weak setup. And yeah, maybe you get lucky. And if you've already decided to trade, yes, I do wish you the best of luck. I hope you crush it. I hope you make a bunch of money. But considering the fact that there's a mismatch, we have a data drop in 20 minutes. Coming out at 10 a.m., we're getting consumer confidence. We're seeing some funkiness in the world's biggest equity. NVIDIA looking a little bit weak. Mag 7 is actually starting to flow to the downside. While even this, I'd be more confident in the SPY if I saw people buying calls. No one is buying calls. They are getting out of puts. So why you're seeing the market go up right now is as people are selling puts, the market makers are unhedging their downside short as in buying back. So this is just a reaction. What you're seeing in the S&P 500 right here, that pump is exclusively a reaction to the market makers getting, like, they just don't have to be as short. Vol is calming down. People are selling puts. They don't have to hedge their book, i.e. they don't have to be as short. They went short to hedge their books. And since they don't have to be as hedged, they're buying their shorts back. So they're going back to neutral to unhedge their books. But obviously, to get out of a short, you have to buy. And that's what you're seeing right here, that buying pressure. So it's a little fictitious. Not all price action is made the same. And this is why it's so useful to have a tool like Spot Gamma, because you can tell, are the bull, and we just got a flow alert right here. Flow alert is not necessarily bullish or bearish. It just means there's an outside trades currently hitting the tape. So it's kind of like when you get to key levels, it's equivalent to, hey, you just need to pay attention. Don't necessarily assume bullish or bearish. It just means seriously pay attention. But you can see we kind of double top there. The Qs just took out the low, which means that NQ is actually breaking down on the 30-minute. This might be a bullish to bearish reversal. Pay attention. And I also want to point out, and I talked about this in the Discord this morning, this might be another fake out. Look at, can I show you here? This is what's like very important in my mind. Hang on, let me hide this for the second. Okay. So ever since we started selling off, we sold off, the 4-hour bounced back up, got rejected, bounced up, got rejected, bounced up, got rejected, all the way down, bounced up, got rejected, bounced up, got rejected. My question to all of you, is this just another brutal bull trap? Look at all these bull traps we had. We had one, well, you get the point, but I mean, we had one, that's probably the same one. 1, 2, 3, 4. Is this just the 5th bull trap? We try to break out, get smacked, 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 try to break out. Is this just another trap? I don't know. And no one can tell you. All I can tell you is if you decide to go short here, your risk is minimal. If you are long, well, maybe you just want to keep one of these recent swing lows as your risk, because if it does go, you don't want to get blown out. No one can tell you the next bar, but what you can do is be in control of your risk. You can be in control of your sizing, and you can be in control of basically, hey, if it goes to here, I need to get out. And then if you're on the right side of the trend, just ride the trend as long as you can. So I just want to point out how on NQ, it's looking a little bit suspect. And then also you could see a similar setup on ES. It's not as bad because ES is holding on. But if ES takes out whatever we saw yesterday, this is why I'm saying if we take out yesterday's low, this was just another failed bounce, rejection, bounce, rejection, bounce, rejection, bounce, rejection. Is this just another bounce rejection? And then we sweep this low that we saw on Thursday into Friday? Or are we going to see a shoulder, head, shoulder? Just another thing to consider. I'm currently, hang on, let me go back to this. Let me go back to this. We are cracking low right here. We did just puke. Oh, okay. I would watch 24,650. I'm seeing this wick all the way over here. If you're trading NQ on any of this stuff, 24,664 is an interesting level. I just got an alert on Microsoft breaking down. So the world's 4th biggest company is, well, it was 3rd. Now it's 4th. There is a giant downside gap fill to 396.66. I'm obviously not calling that out for today. If I had a target on the day, if things get bad, I'd be looking at 456, just this recent swing low. Obviously, you could also check the spot gamma to see what the key levels are. All right. And we're getting cracked. Did I tell you guys that this was suspect? How many raise your hand in here if I saved you from buying this by pointing out that no one was buying calls? Put your hand up in chat if I saved you from chasing this to the upside by pointing out the fact that no one was bullish. It was just a lack of bearish. And then raise your other hand if I tried to save you, you didn't listen to me, and now you're getting destroyed. So it's either raise your right hand or your left hand. Universal suffrage, no bueno, as in women being able to vote. You shorted the top, Vic Dog. Crazy, me, made me go short. I was saved, me. I took that short. Dude, congrats. I mean, on this sweep now, that's a free play. Put your stop at break even. Don't take on any risk. This is so easy. We all have to admit that we don't know the next bar. It could easily be a brutal V-shaped recovery and we rip to 6,750. Or maybe this is a vomit and you're in a great trade. My point is now that it's so many points in your favor, why would you take on any risk? You take a free lottery ticket. It's a free play. If you are wrong, you're out for break even, no sweat off your back. If you are right, well, you get to capture this downfall with no risk. I feel like too many people, and sometimes myself included, well, recently this has really been happening, is the times that I'm right, and then it goes against me, like I don't want to admit that I was wrong after seemingly being right, so I'm afraid to kind of lay down the sword. But if you just put in your stop, I mean, dude, this was a beautiful breakdown trade. You guys targeted good levels. You had good reasoning. You saw that the Nasdaq was cracking right here. I'm looking for ES to crack. And if we all crack, that means I'm able to trade today. I try to only trade when the 5, the 10, and the 30, the 5, the 10, and the 30 all agree. I try to, in my mind, do that. Sometimes I'm a little early, and those are the times that usually I do something stupid. But hang on, let me put that over there. I'm just setting up alerts. Maybe they'll go off today, but I just want to point out to you, momentum is shifting. 5 minute is now bearish. 10 minute is bearish. 30 minute is testing. Technically, we have 14 minutes, and the 4 hour is right in that cloud. On the Nasdaq, 5 minute, 10 minute, 30 minute, and look at the cloud. Look at, is this just the fifth bull trap? We popped all the way up. I said it in the update video yesterday. I said it on stream yesterday, and I broke it down before the market opened today that we are not necessarily out of the woods. I mean, we've just seen it too many times, and I got caught in it too many times. The only yesterday, all day, I was like, dude, something doesn't make sense here. My spidey senses are tingling. Why I said that was because I was the dumb fuck trying to buy that bounce, trying to buy that bounce, trying to buy that bounce. Every single time I tried to buy the bounce, and then before I knew it, I didn't have much more money to keep buying that bounce with. And then I realized, oh, we're just not, like, we are not stable. We are not holding equilibrium. We are below equilibrium, bouncing all the way back up, getting rejected, and then turning over. And I guess I just wanted to call it out to you because your boy recently has lost a lot of money doing that. A lot of money doing that. Oh, MSTR is getting hit. Nvidia's down 6%. All right, we are at this key level. I'm telling you, folks, this is not a run-of-the-mill key level. This is a super important one. This is where your gamma gets absurdly negative. We break this hedge wall, 6680, hedge wall. It's in red for a reason. There's no support beneath. There's new support at 6625. That didn't exist as of this morning. In fact, it was created right at market open. So someone attempted to throw in support at 6625. So if we snap 6680, my target, yeah, maybe a hiccup at 50. Look at, they're just trying to protect yesterday's low. This isn't a random run-of-the-mill number. They didn't roll some die and say, okay, why should we do 6625? Why did they do 6625? Because they are picking yesterday's low. They're saying, okay, we are attempting to protect yesterday's low. There's a real chance that this is about to drop to 50, maybe 60, a little bit of a bounce. That fails, and then I'm going to be looking at 30 and 25. That's the bear case that I'm seeing right now. And then, of course, if we just randomly bounce at a level, your target would be recapturing 80, and then from there, 6,700. That's how you would want to look at it. Google, if Google snaps, NVIDIA's dragging things down right now. If Google snaps, I'd look for this sell-off to accelerate. But looking at this flow, that's horrible. Mag 7's getting smashed. Look at the S&P 500. No one's buying calls. They were selling puts, and then starting 10 minutes into the day, they started to buy puts. Do you know what this was actually? This put selling? It was most likely this player creating their position. They were probably selling the puts down at 6625. So as soon as they created the position, the put selling stopped, and then people turned back into buying puts. So if I had to guess, just based on the timing, and I'm not 100% sure of this, but the fact that puts were being sold, they were probably being sold to open, not sold to close. Look at this right here, 6625. That position was created since market open, perfectly aligning with the first 10 minutes of the day. They created the position, and now it's done so. Now it's donezo. Look at that waterfall. Look at that waterfall. Jesus. Wow. Oh, I haven't showed you guys yet. I haven't traded yet today. I was good. I kind of wish I traded. If I took any of these shorts, I'd be looking pretty good right now. We are considerably far away from VWAP. I don't even know if I have my stuff set up properly. I think I have my trade copier on. Oh, look at all these beautiful shorts. So the flush started at 10 minutes into the day. You had another chance to short at 9:41. You had another chance to short at 9:44. You had another chance to short at 9:47. All of these would have been risking the recent high, and all of them would have paid bigly. I'm a little personally nervous to chase this at the moment just because we've already moved so much. I might need a little bit of a bigger bounce, but literally that level, where are we at? I told you, we are looking right here. We already hit that one, 6640. Your next swing low is 24,579. That's about 50 points below where we are right now. Wow, this is accelerating. Folks, what you are experiencing right now, why it's so fast, is because of negative gamma. I don't know of any other people who are trying to explain the math of how much impact the options market, the derivatives market has on it, but you guys are in the right place to understand why this happens. And then in other days when we're in positive gamma, it seems really difficult for us to move up or down. It is sticky price surface versus slippery price surface. And whenever you see red, that is slippery price surface. And then I obviously was just looking at this key level, looked at the hedge breakdown, and basically called it out to you that if this starts to go, it's going to go. In the very short term, 6650, right about here. You have a little bit of a positive gamma node, but really the new play is down here at 6625. And then obviously past that, you have 6,600. But this play where my cursor is in the bottom left of your screen, that is new as of market open. That did not exist at market open. And going out on a little bit of a limb here, I think it was this player right here. This put selling, I have a feeling that's what the play was. I wonder if the market is going to be in the seek and destroy move and kind of get into that. I wonder. Pass my evals with that move. Massive congrats. Massive congrats. Unfortunately, the Apex deal is over, but Take Profit Trader just started up their deal. 30% off, no activation fee, and 100% of your initial test refunded if you get your first payout. That is a phenomenal deal. 30% off, no activation fee, and your test fee will be refunded on your first payout. All you have to do is use code Goonie. Like I said, I have no particular loyalty to any of these firms. I always just use the best firm at that moment in time. And right now, since that Apex deal is over, TPT is the one you could probably go with. Once again, code Goonie, 30% off, no activation fee, and 100% of your test fee refunded to you on your first payout, as in you could get to the payout, and not only are they paying you money, but you're getting your other stuff refunded. So just want to let you know that what's going on. All right. We are bouncing off the high from 2 days ago. All right. So we have some buyers stepping in right off of this 60. Once again, where's that daily chart? Where's the daily? You can see we are bouncing off the high from Friday. So finding support right at the bottom of this EMA cloud. And it's also the high from Friday. So that's kind of what we're watching to see. And where are we bouncing back to? Surprise, surprise, we're bouncing right back to that key level of 80. It's time to see if this holds or not. I'm still personally hesitant to trade because of that consumer confidence report. It comes out at 10 a.m. And these ranges are pretty large. Maybe I could get in and get out before something crazy happens. Oh, 86. I mean, these ranges are so big. I wonder if I should size down or do I just try to get lucky? But look at that. We're bouncing off a key technical level. We're going from 60 right back up to 80. The question at a key level, as always, is pay attention to it. I don't know if we're bouncing or breaking. You watch it. Are we going to keep going up to 700 or do we sweep the low? You have good risk and you try to ride it all the way back down. Oh, do I want to risk $800? If I take this short, the risk is $800. That's a decent bounce. Look at that. You could see right where it started. 950, boop, 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 boop. Like just nonstop, just ripping. Oh, VWAP is all the way up at 837. The 5,000 tick started to break down. 98. If it fails 700, I'm going to be pretty interested in this play. if it fails at 700? But what if it bounces first and then I get screwed? What if it bounces first? And then like I said, I'm trying to be very mindful of the fact that we do have the consumer confidence report coming out in about 5 minutes. So from a structural standpoint, I'm curious if this bounce is going to fail, and I'm kind of watching the upswing here. Obviously, I have no positions. I have not traded yet today. What's the options flow looking like? We're right back into 80. We might be tagging 700. I mean, look at that. We went from 715 down to 6,660 up to 80. These big swings, that's all possible because of negative gamma. Like this is, I mean, look at the stability. It's increased a little bit. We started off at 18%. This is just nuts. Absolutely nuts. What is this one? 40. Wow, dude, we are moving like no other. Look at that. All right, we're either witnessing a crazy V-shaped reversal or just A, B, C, lower high, it falls and we collapse. There's no way to accurately predict it. We're all just kind of flying by the seat of our pants right now, folks. We're all flying by the seat of our pants on this one. Either it's just going to be that the V shape or the Nike swoosh or whatever you want to call it, or A, B, C, and then D, and we just vomit. Wow. The Mag 7 is trying to recover, vomited till 950, overall trending down. The S&P 500, I'm actually giving the edge to it failing because still no one's buying calls. Of course, maybe because of the consumer confidence report, they decide to start buying calls, but I'm just letting you know, no one is buying calls right now. No one is buying those calls. I'm on the wrong chart. Look at that. So we just had this huge puke, vomit, caught itself again. This is why I didn't want to chase it to the downside. I figured I had to wait for some sort of reversion, just because if you are chasing, by definition, you are taking on more risk than you probably should be. And at this point in the day, we are 3 minutes out from that consumer confidence report. I should probably myself just be patient and wait for it. Damn, I really wish I just had one of these breakdown trades. It just never really... This probably was the only one that I would have been interested in, short at 686, risking about 20 points. Would have been good. I probably would have taken it off at $1,000. Yeah, which I would have got on this first flush. That's a bummer. All right, we're back up to 800. VWAP is 833. According to Bookmap, the point of control and VWAP are pretty much the same. Point of control is currently 850 and VWAP is 833. That was a low liquidity sweep. There was not much trading going on in that entire sell-off. Like, it was just really rapid. It was pretty sparse. You could see that in the volume profile. So I'm wondering if this is just the reversion that we get rejected at. It seems to be key levels on NQ. And then obviously we also have some key levels here on SPX, basically just back up to 6,700. Do we accept it? Do we reject it? Your guess is as good as mine. But I can tell you, like, just, it's a very, very slippery price surface. And now we're at this key level. All right, time will tell. All right, let's see if they're bringing on our boy Rick Santilli. We're going to be finding out in 90 seconds what the consumer confidence report is. This is kind of what I was waiting for to actually trade today. But once again, consumer confidence coming out in 1 minute. They expect 93.5. So there's going to be a little bit of jostling in the market, most likely from this. Let's see what in the world happens. Once again, 93.5 is the expectation. That's the forecast, which is lower than last time around. But let's see if they're bringing on our boy Rick here. We want Rick. We want Rick. It's coming out in 1 minute. Mag 7 is getting a bounce since 950, and still no one is buying calls. Oh, someone just started to buy calls, actually. Almost as if they knew what this was going to be. Almost as if maybe someone is front running this. Calls are flat, a little bit of call selling. Calls are flat, just got a pop. We saw some put selling a little bit from 950. Maybe it was people locking in those profits from this put buying. But I'm really kind of paying attention to this call line. Just no one cares about calls right now, which, remember, to move this, you probably need big money. So if big money doesn't care about calls, there's probably a good argument that you, at least at that moment, shouldn't be caring about calls. And then looking at the Mag 7, lots of call selling. And then at 9:54, it turned into some longer dated call buying. All right, where are we at? Where are we at? Where are we at? Where's Rick? Initial reaction is to the downside. We ran right back up. We went from red to green. It might just be a red-green test. Where's Rick? Where's Rick? I'm scared. Where's Rick?
Tuesday morning. Welcome to Squawk.
Come on, give us Rick. Give us Rick or give us death.
Of the New York Stock Exchange. Coming up this hour, the changing leadership in the AI race. We'll talk about Alphabet's latest moves, how they're impacting NVIDIA, Meta, OpenAI, and potentially the entire market. Plus, the latest read on retail and a crucial week for the space as Dick's Sporting Goods reports results. We'll talk to Executive Chairman Ed Stack with the stock lower despite a beat.
Speaking of retail, consumer confidence data just crossing now. Let's get to Rick Santelli.
There he is.
Hey, Rick.
Yes, these are November numbers. On the headline, we're expecting a number right around 93. Big miss here. 88.7, the weakest since April, Liberation Month.
Probably
and
not
if we
what
look
the Bulls
in the
wanted
rearview
to
mirror,
hear.
there is something. We do see an upgrade of last month from 94.6 to 95.5. On the present situation, 126.9, another miss, although a positive revision, 129 to 131, 126.9, the weakest since March of 21. And on the expectations, what may lie ahead, also light, 63.2. That would be the lightest since April of this year. And once again, in the rearview mirror, another positive revision.
More call selling
71.5
and put
to
buying.
71.8. All three
Even
are
the Mag
misses
7
for
took a little
November,
bit of a
but
hit on
last
that.
month
I think we're
upgraded a
reversing,
bit.
folks. I think we're
And
seeing
we also have pending home sales coming out. And for that, we'll head to Diana.
I'm looking for this to
Diana?
crack the low.
Well, Rick, pending home sales in October rose 1.9% from September. That's a nice beat. The street was actually looking for flat. Sales, though, were down 0.4% from October of last year. And this count is based on signed contracts, so people out shopping in October and inking deals when mortgage rates were falling from their recent highs. So that drop may have helped push demand. Of course, rates came back up in November. There were more listings available than the year before, but supply hasn't really moved month to month in a while, and it's actually weakening right now. Regionally, sales gained on a monthly basis in all regions except the West, where they dropped a bit. The West is, of course, the priciest region in the country. So now we're heading into the super slow season for housing and seeing new reports that more sellers are delisting their properties. Redfin just reported nearly 85,000 U.S. sellers took their homes off the market in September, up 28% from the year before, and the highest level for that month in 8 years. And Sarah, I have to believe that consumer sentiment we just heard from Rick is playing into that delisting.
Okay, thank you very much. Makes sense, Diana Olek. I'll just add another sort of worse than expected report to the mix today, which is retail sales. Yes, it's old because it's from September, but retail sales gaining 0.2%. And the expectations was it was going to gain 0.3%. It also marks a drop down from August, where we saw a 0.6% rise. If you dig beneath the surface, it wasn't all that bad. 8 out of the 13 categories actually grew. You did see some strength in places like gas stations. Remember, these aren't adjusted for inflation, so higher prices feeds into it sometimes on a monthly basis. Autos actually did see a decline. That was the first time we've seen in several months. Beneath the hood, besides gas stations, there was strength in grocery, furniture stores, also in the only services part of this report, which is the food services and drinking places, restaurants. But look at where some of the declines were. discretionary, sporting goods, hobby stores, online actually saw a decline, which was unusual lately. Clothing and clothing accessories, electronics, and I mentioned auto. So again, bit of a weakness and a dip in September from August, which pretty much jibes, I think, with what we've heard from some of the retailers. Although I will note we got a lot of them today, and there were some better outlooks to report. For instance, Dick's and Best Buy and Abercrombie all
this is
posted
a
better
PG
guidance.
show.
You see it in some of the stocks. Kohrs is a self-improvement story. It's up 33%, surging. But as far as what we're hearing, guys, from the consumer, let's just take Kohrs, for instance, because here's what we heard about the consumer. While the results are encouraging, we continue to operate in an environment where our customers are becoming increasingly choiceful. There's that word. As their discretionary income remains pressured. This is especially notable in our low to middle income consumer as well as our younger consumers. These customers are becoming increasingly savvy and are seeking more value. We expect this customer behavior to continue into Q4. And then, Corey Berry, the CEO of Best Buy, on the call. Resilient, she used the word, but deal focused and attracted to more predictable sales moments. While customers continue to be thoughtful about big ticket purchases in the current environment, they're willing to spend on high price point products when they need to or when there is technology innovation. So retailers are just having to try harder because choiceful, value, deal oriented, newness is another one we hear about. They're just having to work harder for those sales right now.
Inflation adjusted, this September print would have been down a tenth. RenMac today kind of sums it up. Softer core inflation, softer core retail sales, ongoing weakness in employment, ADP down 13,000
that weekly number
on the average week. And chief economist was on with Leisman this morning, called it kind of a C plus B minus labor market.
Also, you've been posting some of the credit metrics, which under the hood have not looked good on consumer credit. Rising delinquencies in places like autos and credit cards.
Lizanne Saunders has a great chart from the New York Fed. The rejection rate of all types of credit, meaning you want a higher credit limit, you want auto loan, that's a cycle high in October.
So it's odd to me that the Fed is still considering not cutting interest rates, given all of this data. And yes, maybe they don't have the official October CPI and the October jobs report, but I think there's a lot of data around the edges showing that it's not booming. Right? Fine. If you don't want to look at confidence, if you want to look at sales, there's evidence that there's a little bit of a step down. It's not recessionary. It's not a drop. Things are still okay. But if the goal for the Fed is to preserve the recovery and the strong labor market, maybe that's why the market has gone up now more than 80% odds that the Fed's going to cut. Also, some of the Fed speak lately has helped. Mary Daly last night.
Wait, where
are we got out on the potential trend reversal there.
When we were
obviously, if it starts to go back down, I'll get in. I just didn't. I wanted to lock in my money.
John Williams of the New York Fed, who's considered a very key Powell
scaled
ally,
out at different points. That's why some are at 1.5, some are at 700.
Suggested that he would like to cut.
I was trying to give it one bounce there. That was the high, and then obviously I saw the higher low. I saw the fresh high. Didn't want to be involved. Just trying to ride the trend as long as I possibly can, and it just happens that the trend might have reversed.
We've seen the bonds rally. Look at the 10-year. We're back down to 4%.
Yep, I did notice that. But thank you for updating me on everything else.
It's always my pleasure.
Watching
you
this,
and everybody else.
Because we have
because
this
I'm very
higher
much
low.
focused on technology. So let's turn back to that, shall we? And of course, shares of Alphabet yet again up 2.3%.
This is the structure I'm watching right now.
Certainly,
I just didn't want to risk it coming up to VWAP because then I'd be losing money.
In terms of AI and the development of the various models. Christina Parson-Nobles has more on Alphabet's plans and perhaps the bigger impact.
As much as I would love to just hold that and see how it goes, you just never know the next bar. Here was my initial short. I gave it a puke, and then right there, I had to wait for the first bounce. The first bounce was a little bit larger than I wanted it, and then you could see I was giving it a chance to fail. Bounced, took out that high, and I just got out of the position. You just never know what's going to happen, and it's far more right here. I would be red if I held that play to this moment. I would literally be red on it. So I gave it a shot. I gave it one little bounce, and it turns out that bounce was taken out. So I took my money, moved on with my life, made thousands of dollars. Okay, cool. You never know what the next move is going to be. So if your idea is that like right here, no one knew this was going to be the low at 655. I mean, people were probably looking at 600. I mean, that's a 50-point differential. Right here was a one bounce and okay, looked like it failed. Nope, saved itself, led to a little bit of a reversion. And right here, this could fail for all I know. I don't know. All I can tell you as a trader, I'm in control of my risk. And as my risk, I'm definitely, after I go up this much money, I'm not going to let it go red. And I would have literally been tagged out right here for break even. And I'd be like absurdly pissed off. So I try to trail it. The structure change. Hey, it happens. It happens. And guess what? There's no pattern day trading or anything like that in the world of futures. So I can trade again. If this fails again, I can get back in. Maybe I'll risk this high. I am done with these take profit accounts though, because I made enough money on those today. And here I basically made back what I lost yesterday. So that's good. That's a good first trade, giving me a little bit of it. But I think there's a lot of people who try to come to this and you're trying to predict, what's this move going to be? What's this move going to be? No one knew it was going to switch here. No one knew it was going to switch here. Like, you just don't know, because whether we switch or we don't, that's dependent on other people trading in the market. Are they going to buy? Are they going to sell? You don't know what they're going to do. Is there going to be a random announcement from the administration? It's just, it's impossible to know, which is why, more than trying to predict it, I got in here, try to ride it. I could have been super aggressive and gotten out at 92. I didn't, because I was like, well, what if it wants to tag 700? That's really what I was thinking. And then by the time it tagged 700, we bounced 40 more points, which is why I gave it one shot to fail. And as soon as it came back up, that's exactly when I got out. I didn't want my stop to be below 700, just because I figured as a key $100 value, there was a good chance of it retesting it. So I was like, okay, let's see what the next pump actually is. And unfortunately, the next pound just happened to be 45 points above it. So it happens. But hey, green, I could end it here. I made back pretty much my loss from yesterday. I suppose if this fails, I could get involved if I wanted to. Oh. All right, let's pay attention here. That is a large amount of risk. It did crack. Fuck. I was thinking about getting in at 52. Maybe I should wait for this potential trend line bounce, because this is the slope of the lower highs. This is the slope of the higher lows. Technically, we're consolidating. If I do short here, I could risk 33, which isn't bad. Let's take a look at flow. Let's take a look at what's going on there. The Mag 7, people started selling calls again. S&P 500, someone tried to buy calls and they quickly got called on their bluff. Is this just another higher low? Let's see. We have one higher low, potentially two higher lows, but we also know we have lower highs. So the price is just getting more and more compact. More and more compact here. And ranges are clearly expanding. So support was once again found at 700. The question is that going to fail? Is that going to fail? Remember, folks, this is not a game of predicting. If you're predicting the next bar, you're going to be right half the time, wrong half the time. This is a game pretty much exclusively of risk management. Can you be disciplined enough to stick to your risk, and then maybe you just get lucky and it trends in your favor? That's all you can do. No more, no less. No more, no less. SPY started popping again. This is getting a little frothy over here. Call swung up, swung down. Puts also swung up, swung down. Little bit of recovery right here. We're basically, we keep battling it out at 6,700. We didn't even attempt to save it. We puked 40 points, bounced all the way back up, puked again, bounced all the way back up. So what we're experiencing right now is more so, I would say, in the S&P 500 than in the NASDAQ of this battle. Who's going to win? Who's going to lose? Like I said, I've already said it a million times. I'm going to say it again. If you're trying to predict who's doing this, like who's going to win and who's not going to win, you're behind. Just wait for the reaction. We either are taking out a high and you could risk the low, or we take out the low and you could risk the high. If you think that's too much of risk, just don't take the trade. Like we really don't need to overcomplicate this. Good trading in itself is relatively simple. The tough part is just having the discipline to do exactly what you should do. The 5-minute is bearish, 10-minute is bearish, 30-minute is attempting to save itself, 4-hour attempting to save itself, all in the S&P 500. On the NASDAQ, 5-minute, 10-minute, 30-minute, 4-hour is all bearish. Yeah, look at this, still lower highs and higher lows. We're still consolidating. No evident trend yet. I guess if you took this breakdown trade at 50, if you're okay risking up to 80, that's 30 points. I don't like risking 30 points in consolidation, but maybe you're trading micros, and then, yeah, maybe that's acceptable. It's just, I find structurally using the recent swings, whether the low, the high, the low, I feel like that's way, way easier. If you're using, I only risk 10 points on every trade, I don't like that in a general sense, just because, like, what's the chance of your points being like perfectly aligned with extremes on the chart, perfectly being aligned with the current state of volatility? It's pretty low. So I think it's better to either use recent highs and lows or use ATRs, average true range, because ATRs do expand and contract with volatility. So I like that mindset a little bit better, but I'm basically waiting to see if this is going to fail or not. 50, 30, 80, 50 points. 50 points, that's 20 points.
Order submitted.
All right, I'm using a tight risk on this one. I'm seeing if it's going to fall just to this trend line. Obviously, I'm using this recent high. You could use this up to 80. It's a little bit wide. Oh, fuck. I was going to say it's a little wide for me. I might be getting, oh, shit. Why is this not going?
Order filled.
Fuck. My shit's frozen. Motherfucker. Why is it? Hang on. Fuck, it froze on me. What happened? Can I do it now? What the hell was that? All right, well, I'm moving my wrist to that. What the fuck was that? That was some horse shit. Fuck. That's a bummer. That's a bummer. Well, maybe I shouldn't complain. What if I get lucky? Because I was going to do it at 50. What if 70 was the high and it just puked? So maybe I shouldn't be complaining quite yet, even though I very much was, like, I mean, you saw it. I was trying to move it to 50. It's going to tag me here. Get rejected. Get rejected. Get rejected.
Order filled.
What the fuck what is trading?
Order filled. Order
Dude,
filled.
I have no idea what is going on right now. Completely fucking confused of what is trading and what is not trading. Do I need to log out and log back in? Or do I just need to maybe I need to disconnect and reconnect my copier? The fuck is going on today? That was so weird. All right, I'm going to kill my copier and reconnect it, and then ideally that fixes whatever the fuck my problem is. Hopefully, because something just froze. I wonder, am I running too many programs? Am I running my CPU a little too hot? It wasn't the machines, it froze. Like, I was trying to update my my risk, and it just did not update properly, I suppose. Did not update properly. That's a bummer. What the fuck? I was in at 25, so I was up 500, so I'd be net up 100, because it still would have been clocked had I got it in, and I don't know, even if there's a little bit of slippage. Basically, I was risking what I was green on the day was like was my goal, but I don't know why it just I have a feeling maybe I'm running too many programs. Maybe my computer's running a little too hot at the moment. Which whatever. Basically, I'm just break even on the day, so not the end of the world. Could have been way worse. Could have been way worse. Looks like SPX is still really trying to battle at 6,700. I have a feeling on one of these it's going to get smacked just because I'm not seeing this. This is just put selling. I'm not seeing the buyer step in. Of course, I would change my opinion if I especially see that green line start to spike. See how it did over here? If that keeps going, yeah, okay, then there's a real shot that maybe it can get in hold above that. But until I see that, your boy's questioning this move. I think this resistance, it's a little bit too serious of resistance when considering the lack of buyers. But obviously, the market's dynamic, changes on any given moment, and you just don't know. You just don't know. All right, what are some of these extremes? This is the S&P 500 put selling, no call buying, mag 7. You have the calls are all over the place. Puts are pretty flat. There was a lot of call selling, then some buying, then some selling, then some buying, then some selling, and currently some buying. But is this the rejection? I'm watching this trend line right here, the 6,700. These ranges are large, brother. They are large and in charge. What is this extreme? 39. All right, so that's where we wicked. Look at that. I mean, these are 40-point ranges. If you're wrong per mini, you're risking $800. But then again, if you're right, obviously it cuts both ways and you could be really, really right. Where are we at? We're right at this. Is it going to break or not? 6,700, 6,700, 6,700, 6,700. All right, what is this? What is this? A little bit of a pop right here, trying to save itself. Here's a look at the Mag 7. Not the most interesting trend. S&P 500, no one's buying those calls, and the puts stopped getting sold. What is this low? 67.
Order submitted.
Fuck.
Order submitted.
What was this low? That's not really my target. If there's a crazy flush, I suppose that's a reasonable target. But what I want to do is more so chase it, trace my stop to the downside. I just need to survive this initial bounce off of 700. Not only is it a trend line, it's a key psychological level. I like that my short is above it. So if we do crack it, I can put my stop to break even, and I'm kind of protected that by that level. But as I literally just alluded to, I just need to survive this first bounce. There's a good chance technical bounce, key psychological level. I just need to pray that the bounce isn't so large that it like somehow fucks up my accounts. Honestly, that doesn't... Fuck. This is what I was worrying about. Come on. I'm accepting a 45. That's 23 points of risk. I could take that considering how much buffer I have. I just need this crack to hold below 6,700. And then, yeah, we're right at this trend line. Right at it. What is this? That's 44. Dude, this is a time to size down. If you are trading multiple minis, like God fucking speed, dude. I could move my risk to 44. I would have preferred it tagged 50. Once again, just trying to use that key psychological level as a bit of support. Really, I just need this to crack 6,700. I just need this to crack 6,700. Come on. This trade that I'm in, I was actually trying to get in at 37 when it swept right here. So I am off by about 15 points. So I'm kind of taking on $300 of extra risk than I would have preferred to. Fuck, dude, look at these ranges, man. This is astounding. I don't like how it just swept that. Not in the slightest. But this is why I'm sizing down. I mean, with this buffer, you could argue, Matt, why aren't you trading like whatever, 2, 3, 4 contracts? Well, it's because of these ranges. If you're wrong on 2, 3, 4 contracts, you get blown out like no other. With one contract, if you're right, you still make good money. And if you're wrong, at least it's not as painful. I mean, dude, look at this. We're moving 10 points like it's nothing. Every 10 points on a mini is... Fuck, I don't like this succession of higher lows. All right, how can I de-risk this? This is such a natural target. We swept 80 so many times. Fuck, I thought I was going to be really safe with this, and now I'm getting concerned. Not good. Not good for me. We bounced right off of 700. This, a mere minute ago, when I was saying I just need to survive this first bounce, this is what I'm talking about. And it's not enjoyable thus far. It is not enjoyable thus far. All right, maybe I'll get lucky. Come on, just flush it. If we could even 710, I could lower my risk by 20 points. As you could tell, my main mindset right now is, can I reasonably lower my risk? That is my goal, to reasonably lower my risk. All right. Come on, sweep 14. Sweep it. S&P 500 not really doing anything. Mag 7 trending down. That's in my favor. SPY. Yeah, let's go to the 5 minute, the 5 minute, the 5 minute, the 5 minute on Google, potentially cracking that trend line. SPX, it did break its trend line. You can now watch this trend line, a more extreme one. Come on, fucker. Snap. It barely snapped 14 by a point. Fuck, dude. These ranges. I was a little overconfident in this puke here. I really thought it was going to get going. I thought it'd be like a 20-point bounce off of 700. I thought it would maybe push me break even and then vomit. I did not expect it to be 60 points, which that's on me. I should have had more realistic expectations for how bad this could get in terms of the bounce against me and still technically be trending in my side. Like, these bounces are fucking nuts, man. We just bounced 40 points in like a minute. All right. Double top or continuation? Are they going to run it all the way up to fucking VWAP on me? No.
Order
Yeah.
filled.
I could have tried to move it for a second, but I find for my own trading, when I do that, that's when it gets really, really bad, and I move it up. And then all of a sudden it goes to there, and then I move it up again, and then I move it again, and it just keeps going against me, and that's how it balloons. So as much as maybe I could have protected myself at 820, 830, there is the off chance that this just keeps going, and instead of tagging me at 80, it tags me at 20 or 30, and then that's another $1,000. So like, I very much believe this is going to get clocked at some point today. It's just, can you take advantage of it? And I just, there might be another random pop before it happens, and I just can't take that risk. There's a good statistical chance that if I held on to that one contract, I would be perfectly fine. I just don't want to take that risk, because in my own trading in the past, that's what screws me 100%, where I'm like, nope, I'll just give it more room, and I keep moving the stop higher and higher and higher. Like, yeah, maybe if you're trading with trend, a lot of the time it does happen, and it comes back and you get your fill and whatever, you're fine. But I really deeply believe it's teaching the wrong lesson. Like, I really, really do, because right here, I mean, it's already another 25 points. That'd be already another $500. So like, maybe I could get in a good trade on a VWAP rejection. Like I said, when it started to bounce here, my worry was it wanted to touch VWAP. So at this point, I saved myself 40 points. I saved myself $800 already. 80 to 20. That's a 40-point move. $800. Instead of being down 1,300, I'd be down 2.1. So like, it's just, you got to protect yourself. You got to, especially like I do, like many of you right now, like, all right, 6,700. We're pushing that red to green. Actually, how's NQ? This might be a bounce. That could be another higher low. We have these lower highs, but we also have these higher lows. So it's kind of consolidation. Google is seemingly keeping things aligned over the past 10 minutes. NVIDIA caught a bounce. You just don't know. Buyers might choose to come in, and I could get completely steamrolled. And you know what's like, yeah, does the loss suck? But you're also going to be losing probably roughly half the time. Like, that's just, of course, plus or minus like whatever percent. But most of the time, like, you're going to be playing a 50-50 game. So if your goal as a trader to come in is win every single trade, win every single day, you just kind of have a generic misunderstanding of the distribution of how trading works. It's unfortunately not that simple. It really, really isn't. You have to always protect yourself. And the whole, in my, I guess, assessment, the name of the game is to protect yourself so you can survive the marathon that is trading, so you have the opportunity to get on the right side of the trend, and then you catch that big trend following move, and before you know it, you're green on the day. So like, it's just, I don't mind it. I mean, I like the trades. Granted, I chased the one to the, I should have been in at 37. I got to fill at 22. So I was off by 15 points. But in terms of, I was with the trend. All of this was bearish. I was trading with trend. I was risking a recent high. You could argue it was a bit of a risk, like obviously for how far away it was. But also when you're taking on bigger risk, you had bigger reward. If we flushed, I could have made thousands of dollars. So I actually liked the trade. It just didn't work. And there's a really, really good chance that if that situation presents itself tomorrow, whatever, the next X amount of trading days, I'm probably going to keep taking it just because I was trading with trend. I know that we are in negative gamma, and I was looking for the rejection off of 6,700 right there. I was thinking, okay, lower high. All right, we cracked the whatever this trend line was. I was in right around 1020. I was looking for this fall below 80. Unfortunately, it bounced at 83. Just didn't go my way, but I'm not in control of that. And I guess I'm reiterating this time and time again because I want to stress to all of you, really focus what you're in control of and what you're not in control of. What you're not in control of is the next bar, as in you can't predict, you can't force other people to buy or sell. Like, that is not the game you should be playing. And if you're attempting to play it, I feel for you, because you're probably never going to get ahead and you're probably going to have minimal to no success. But what you are in control of is exactly your own risk. Can you explain how the VIX aligns with the market? The VIX is literally just the volatility measure of the S&P 500. To get really technical, it is the volatility of the theoretical 30 days to expiration contract on the S&P 500, but it's just a measure of the S&P 500, the vol on the S&P 500. I was counting on the no support below. Yeah, but just because there's no support doesn't mean that people aren't going to market order in. Once again, you cannot predict that. You can't predict it. You don't know when other people are going to decide to buy or sell, and you definitely can't predict it in aggregate. Maybe you have, I don't know, inside information to like this fund or that fund or something like that, but you can't know it in aggregate. Think about how many retail traders you know, no less hedge funds, insurance funds, high frequency traders, market makers, governments. All of those together are people actively trading on an individual basis, and some of them millions of times a day, especially when you get into the world of high frequency trading. So with that in mind, hang on, I really do actually want to watch this structure. With that in mind, you don't know what they're all going to do. Like, they're all people like you, like me, making decisions. You don't know what piece of information they're using, what they're not using. Fuck. All right. This is the red to green test. Below the white line, the S&P 500 is red on the day. We just try to pump green, and we got smacked. So if the VIX starts to spike and the trend started, does that help the trend? No, it has nothing to do with trend. It has everything to do with the implied volatility of the S&P 500, specifically 30 days out. What just happened to the Mag 7 started turning again? The S&P 500 got a nice pump from 1030 to 1034. That's actually kind of what fucked me up. Do we have our initial balance? We do. Here is the initial balance, folks. This, right? Yeah. All right. So we have, 24,880 as the IB high and 24,601 as the IB low. And we're basically dancing around at the 50% retracement. So we made the IB high right at market open and then again touched it 6 minutes later. We made the IB low at 950 and the 50% retracement is 740. 740, 740, 740. So we do have a succession of higher lows. Here's our low. Here's a higher low. Here's equal lows that are still higher, but low, low, two lows. Here's another low we're putting in. We have equal highs. We did have lower highs, and then it bounced to be put in equal highs. And then from there, the next major high is pretty much that IB high. So I would say something like that is probably pretty important. Something in that neck of the woods. Yeah, there's that double top. And then here's what we saw. Yeah, so that was a nice trend breakout right here. If you took that break, your natural target was the previous high. And then at this point, you probably got stopped out on your runner. But if you didn't, your next runner was either 860 followed by 880. But this is the generic structure we are dealing with today. A little bit in the short term, obviously I'm pretty drilled in, but you had this bullish breakout that did rip to the recent high, but no follow through. Just that. Technically, this is a higher low. I'm curious if it's going to hold, though. I'm curious if it's going to hold. What's your drink of choice in the mornings? Folks, got to be coffee. Matt going to stream OT again today? Overtime? Maybe. Maybe. All right. we haven't really broken. The range was a large range, and it's getting smaller, smaller, smaller. A little bit of a bullish attempt here, but no follow through yet. So as of now, this is the bullish reversal number one, because we sold off and then just the lower highs, higher lows, no real break. This was a clear break here at 1030, and that was perfectly aligned with a weird spike that we saw in the S&P 500, but there's no follow through on that. And once again, it is this call buying that is not holding. Like, this is the major thing that jumps out to me today of why I'm not chasing this in the bullish direction, is because big players are not chasing it in the bullish direction. They have little spurts. They try to, and they fail. They try to, and they fail. The main reason we're going up is this put selling, but it's a lack of bearishness, or people are putting in a ceiling beneath us. A floor beneath us, maybe, but I'm just not seeing bulls. I'm either seeing bears put in a floor beneath us or getting out of their bearish position. So lack of bearishness is probably the best way to describe it, but there is not bullishness in the S&P 500. In fact, the longer dated calls just hit the lowest gamma level of the day. This is a very suspect thing to chase to the upside. Even though price structure is looking good, I don't know, Google actually just cracked their trend line as well. There's fuckery afoot. There is definitely some suspect stuff going on. And really, it's going to come down to, does the market want to hold 6,700? Does the market actually want to hold 6,700? Is there a way to sell premium on the VIX? Of course. Just go to the VIX. And now we're consolidating within a consolidation right at 800. Obviously, the SPY is trying to hold it green on the day. Looking at VWAP, we're right at VWAP right now. Here, maybe I could zoom in a bit better right here. We pumped up to VWAP, tried to dance, got smacked. We're dancing again. Is this just going to be a VWAP rejection? We got as high as 828. If I held my initial position where I got out, I might have felt good on this flush, but you never know. It could keep going. If your base assumption is that it's going to magically come back in your favor, you might be right a lot, but the first time you're wrong, you're going to lose everything. So it's just inherently a poor way to approach the market. Your assumption when it was going against you, don't say, oh, I'm going to hold on to it because it might come back. Maybe it does. And actually, there's probably a really good chance it does today. But on the off chance, even if it's rare, if I keep trading like that time and time again, it's only a matter of time before I lose my accounts. So like, you just can't do it. When you're wrong, if your stop is hit, just admit you're wrong and move on with your life. That's the best way to do it. That is a strong trend though. 5 minute trying to go bullish, 10 minute trying to go bullish, 30 minutes saved itself 2 distinct times. NASDAQ, see, I hate this mismatch. Bullish, 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 bearish, bearish, bearish. Who's right? Well, we're going to be finding out. And if Google's trend has anything to do with it, it's going to be the NASDAQ that ends up falling, dragging the SPY with it. I'm watching Google had a decent recovery from 950 to 1030, but it's starting to show a little bit of weakness. Here's the Mag 7 flow. Google was good, started to crack at 1035. This could be problematic here. This could definitely be problematic. Google starting, actually it's speeding up. Mag 7 starting to take a hit. SPY. The only thing holding this market right now is this put selling. If the put selling, if this trend stops, the put selling stops, we're falling. There's too much call selling and there's no bullishness. It's just basically everyone's like awkwardly waiting to see if this level holds or not. We don't really need that trend line. Obviously, you could watch it. I just feel like it's cluttering up the chart. Oh, are we going to get cracked here at 7.0? Will it hold 700? Look at that Mag 7 puke. I cannot believe there's this much put selling going on. Are there new position? Like, is there positive gamma adding? Stability still at 54? No. At first, I think it was the person selling the 2.5. And then since then, I mean, the S&P 500 is about to make an intraday high. That doesn't make fucking sense. I mean, if you want to chase it, obviously just risk a recent swing low, and I do wish you the best of luck. The reason why I'm skipping on it is because of the mismatch with the NASDAQ and the fact that, well, I was going to say no one's buying, but right here, this little pop, it is more call buying, but look, it's mostly put selling. That's it. That's an uneasy pop. It's an uneasy pop. So if you took it, and I'm not saying like, hey, that's up to you. If you want to take it, and maybe you'll get lucky and call buyers will actually step in. Just when it goes reasonably in your favor, move your stop to break even. But I just don't like the mismatch, and I have to be a little bit more conservative today because of just the fact that I already took 2 losses, and with the range, it added up to be pretty bad. So what was it, like 500 and 800 or some shit like that? I actually still really like my trades. They just obviously didn't break in my favor, which that's going to happen 50% of the time. What is pushing the SPY? Buyers. What pushes any market at any point? Buyers and sellers agreeing on a higher price. What pushes a market down? Buyers and sellers agreeing on a lower price. Now, if you want to know why they're buying and selling at a higher price or why they're buying and selling at a lower price, you'd have to go ask them. Why are they doing it? I don't know. You can make conjectures, but that's still a guess. And at best, it's not fuck, dude. Someone is buying. I was going to just say, I'm looking over here at the flow. Someone is buying something big in the Mag 7 right there. Look at those calls. The calls are just going so nutty. We sold, we popped, we sold, we popped, we sold, we popped. It's this big swing in longer dated calls. And it is not Google. Someone's buying Tesla right now. They're buying Palantir right now. A little bit of Nvidia, not Netflix. A little bit of Meta, not MicroStrategy. A little bit of Microsoft, not Avago. A little bit of Apple, not AMD. So some of the tech names just got this nice swing to the upside, like literally starting at 1044. It seems to be quite a bit of Tesla. Tesla's not the only one, but Tesla's definitely catching a nice bid. Tesla's definitely catching a nice bid. Wow. I don't think the market really appreciates how close this dip at 945 was, and this dip again at 10 was like close to being a disaster. Crazy. Crazy. All right, let's see if it can hold. Like I said, well, hang on. There might be new levels now. 20, no. 40, 55, yeah. The levels, technically we are above, but with today's volatility, this technically isn't a breakout in my book. I would want it to hold for a little bit longer. If we keep going, your natural next test is 50, 55. So if you're bullish and you're looking for an upside target, 50 to 55, if this holds. But that's a really, really big if, because there's just too much mismatch across. Too much like even look at this. They're already This is a really fucking weird day. No one's touching calls. When they do touch them, it's very brief. They buy them, they sell them. They buy them, they sell them. Even right here, they bought them, already selling them. This is not a nice trending day. In fact, it is, I guess, in terms of people selling puts to kind of like give that support. But look they're already selling them again. And then the Mag 7 has no fucking clue what it wants to do. The NASDAQ sold hard, tried to recover, got going again. I don't know. Something's not right here. It's not adding up. We're not getting a nice trend. I'm at the point where I'm kind of hesitant in either direction just because I want all of these things to align either one way or the other. One way or 50 to 55 sounds crazy. Why does it sound crazy? Did you not see the 50-point sell-off we had this morning? Getting an alert on Meta. Where's Meta? Am I blind? Here's Meta. Meta, taking out kind of a recent swing point. Maybe watch 635, maybe watch 642. MicroStrategy's getting hit. Palantir's red. Nvidia's red. Tesla is red. Avago slightly red. Google's still holding green. Meta's green. Apple's green. Apple hit a new all-time high. Microsoft almost flushed and saved itself. AMD is down pretty bad. All right. Rum is green. SoFi back to the cloud. VIX is down a little bit, down 50 points there, 2.4%. SPX. Folks, something about this, like all day yesterday, again today, my spidey senses are going fucking nuts. They're going nuts, man. Fear and greed index 13 equals extreme fear. I don't really use that for my day trading. Maybe you guys do. I'm not saying it's good or bad. I'm just saying for me personally, I don't really take that into account when it comes to the world of like my day trading. All right, we're coming to this trend line. Let's see if it can hold. You might be surprised to find out, but I am waiting to find out about the retest of 6,700. I'm waiting to see, does the 5-minute stay bullish? Does the 10-minute stay bullish? Does the 30-minute stay bullish? The Nasdaq tried to get going bullish, got rejected. Who is right and who is wrong? No one knows. We're waiting to see. Is the S&P 500 right being bullish, or is the Nasdaq right being bearish? We don't know. We gotta wait. We gotta wait. We gotta wait. We gotta wait. Wow, that's quite the sell. So look at this. How crazy is this? You guys could have argued at me, Matt, why didn't you hold this position? You would actually be better off than when you got knocked out. That's true. I got knocked out at 780. I would have had to take another 100 points of risk to go through that. So even though like in retrospect, it seems like, Matt, why didn't you hold? Think about how much more I would have been down holding all the way up to this point. Like it's just, and on top of that, it could have kept going. And it's those moments where I'm like, no, I'm going to give it a bit more risk. I'm going to give it a bit more risk. Like it's just, it's truly not worth it. Time and time again, if your risk is hit, just get out, because if you always think, oh, it can't get worse. Yes, it can always get worse. This got 100 points worse, another $2,000. And granted, it's now seemingly where I was at. So I'd be at this level, but there's no saying it would have stopped there. What if the S&P 500 just kept going and ripped all the way to like 750? Totally possible. It like this is a telltale example. That was a good cut. It took out this high, and granted, it popped. I could have got out a little bit better, but then it really ripped. Simply not worth it. Simply not worth it. But maybe it is worth it if we reject that VWAP here. We're right. I had a trend line somewhere, I thought. Look at this trend line that we're flirting with. Look at this trend line. So watching that trend line, I'm watching VWAP right above 800. Bullish, bullish, bullish. Bearish, bearish, bearish. And then the 4-hour doesn't know. The 4-hour was bearish to bullish, but it just wicked into it right here. Was bearish, went to bullish, now back into it. Who knows which way this is going to break? That's why you just take a bunch of ideally low risk entries and just take a stab at it. Maybe you can get lucky and catch a big trend. We are bouncing not only off the 1 minute 50 EMA, but also this green to red move. We closed yesterday at 6705, and we pumped up to 25. We dropped 20 points. There's still low stability in the system. That's a lot of negative gamma above and below. When we get moving, we could easily get moving in either direction today. Easily get moving.
Order filled.
Fuck. Oh, no. Wrong account. Shit. I'm oddly trading on one account by itself. That is not good.
Order submitted.
All right. Sorry, I was trading off a different chart, which fired a trade on this one singular account that I just put in an order for break even. So hopefully this gets rejected here. But hey, actually that would have saved me because it got its fill at 80 and I would already be off by 20 points. So hey, maybe that was actually a blessing in disguise, but I accidentally executed it on a different chart. So that was really silly. Really silly. But I do have an order in for just break even.
Order submitted.
And now I got my actual trade in. This one's run of the mill. Nothing special here. Shoulder, head, shoulder, VWAP rejection. My risk is right above VWAP. If it flushes this trend line, I'm moving my stop to break even. That's the trade. Minimal risk, high reward. I don't know if I'm right or wrong on this, but I can tell you if I'm right, I get to play it all the way down to 650. I get to play it down to 600. Actually, let's just put this at 650 right now. And if I'm wrong, I just get knocked out at VWAP. So let's see. I don't know if people are going to decide to buy it right here. I don't know if they're going to decide to sell it. All I can tell you is my risk is in control based on my buffer. It's an acceptable risk, but it only gets into trouble where I do that thing where it starts to bounce and I give it more room. It keeps going. I give it more room. I give it more room. I give it more room. That's when I get tilted. That's when I spiral. Oh, so that other random account that was live, it did just get out for break even. So that was a mistake that ended up being fine, but it was one of these take profit accounts. Like I said, I'm looking for the flush of 60, and then ideally I just move my stop to break even, and it's a free trade. It's a free trade. That's all I care about is getting in my free trades because out of 5 free trades, if 4 of them are knocked out for break even, cool, because it's that 5th one that it flushes in my favor, and that's where I make my profits. If your goal, well, of course, all of our goal is to make a lot of money on every single trade. But if that's your true expectation, like if you're holding yourself to that standard, you're going to be very, very upset because the chance of that happening is slim to fuck all. It's going down to 0 today. Well, it seems like it's actually about to come knock me out. Fuck. I was hoping that it would reject at 800, but people might be targeting VWAP. I need to get a little bit of luck here. I put my stop just on the other side of 800. We're at 806 and just at this wick. So I'm hoping that it doesn't knock me out to a point and then
order filled.
Well, that was probably a great opportunity to actually go short. I was trying to protect it. But just in case, I don't know. Could be a VWAP rejection. I gave it a shot. It didn't do what I wanted it to do. It could still 100% collapse. But the reason I got out and I'm not giving it any more room to breathe is as much as it could collapse, it could also rip all the way up to 72. And I just don't want to be that guy. I don't want to be involved in a pump that's like 60, 70, 80 points against me. It's truly just not worth it like this. All right, it could go. The point is I protected myself. I'm out at 13. It's already 20 points above that. That's another $400. Like it's just, they watch Matt stream. You know, as much as it feels like that, it feels like they're coming for your stops, this, that, the other thing. Obviously, they're not, especially when you're talking about like sim defunded. It's just, I'm holding till market close and deciding what to do with my positions tomorrow. Hey, as long as you're keeping your risk in check, that's all that matters, is keep your risk in check. The profits are going to take care of themselves, folks. Like, you're the person in charge of the risk. And when you catch the trend, you catch the trend. I was hoping that this was the shoulder, head, shoulder. I saw the peak, saw a little bit of weakness, figured I could risk the 800, risk the VWAP. I told you, you could probably, when I get knocked out, that's probably a great opportunity to, I was forced out. You probably could have gone short there, and this might prove to be a phenomenal trade. But the reason I got out, even though I think this is going to get cracked, is because in the meantime, there's nothing stopping it, especially on a day like today, going another 50, 100 points against me. And then that's where I get into trouble. Not necessarily from the account perspective, but from a mentality perspective, that's where I get bad. That's where I get tilted. And I start fighting the trend, adding on extra contracts. And it goes so bad, so quickly. And I just don't want to deal with that. I mean, one good trade and I could go green. Now, if I just have a horrific trade, that might be where I completely blow out. Don't want to deal with that. And look at that. I bet it drops all the way to 82 and I'd be fine to begin with. I'd be fine anyway. But the game's about protection. Oh, so if it cracks 72, the risk is 40. That's a large risk, folks. Dude, it's going to come right back down. I would have been fine anyway. I just didn't want to risk 40 plus 20. That's 60 points. That was risking 1.2K. It's a lot of risk to do that. All right, we are clearly back at VWAP again. Maybe it still is the shoulder, head, shoulder. Maybe I was just wrong at the shoulder. Shoulder, head. Maybe this is the shoulder and not this. That's possible. Or maybe this is just a higher low, higher high, and we bounce. We're just right now getting pinned to VWAP. Getting pinned to VWAP. We bounce right off that trend line. Google's getting hit. Nvidia's flattening out. Mag 7's not really doing anything. S&P 500, look at, people are not buying calls. I know that we've had a pretty decent bounce from the intraday low, but the fact that no one's buying calls is telling me it's tactically the wrong trade to be bullish right now. It is telling me that it is tactically the inaccurate play. What time is it? It is 11. Did we break the IB? I think we did. No, we didn't. We almost did. We got to pump up to almost IB, and we dropped from 80 down to 60. Jesus. We dropped 120 points. Once again, the red dash line on the top is the IB high. The red dash line on the bottom is the IB low, and the blue dash line is the 50% retracement. And it seems like we're just getting another strange consolidation. We just higher low, higher low, higher low, equal low. Well, would you look at that? It knocked me out, and I'd be back to break even anyway. Fuck my life. But sometimes that's what happens. If you get caught up in the woulda, coulda, shoulda, there's the one thing that I can seemingly guarantee you is the next time when you're like, nah, it's going to come back my way anyway, that's going to be the time that it's a strong trend against you, and it doesn't come back. I don't know why, but the market has a sick sense of humor, and it does that a lot, where you can be following your risk appropriately, and then the time that you're like, yeah, you know what? I'm going to give it a little bit more. That's the time. Shit. Is Google breaking down? Calls are getting sold. Mag 7 is tilting down. S&P 500 is starting to dive. We're having an issue at that high value potential trendline break. Google just got hit. It's at an intraday low. Google is $1 green on the day, 0.37%, 0.36. So maybe pay attention to that. Oh, we're battling it out at VWAP pretty much. Pretty much battling it out at VWAP. At 810. We overshoot, we undershoot. We overshoot, we undershoot. We overshoot, we undershoot. We're just dancing around. No one knows which way we're really going to get going today. Could be another higher low, or is it going to get smacked? Wow, all these pops, they're so vicious. It's so much size. I feel like a rule today is if you like a trade, you could probably just put an order 10 points in your favor and it'll probably get filled anyway, and you could probably save yourself the 10 points. Wow. Like, look at this. We went from 840 down to, that's a 60-point swing like it's nothing.
Order submitted.
Well, we'll see how this goes. Fuck, is it just going to be another double bottom here? Fuck me. You know, you think at a certain point, you have to get all of your bad luck out of the way. You would think at a certain point, okay, if it can flush 75, I can move one of these to break even. Motherfucker, it's bouncing again. Dude, these bounces, we're just not getting that trend started. Fuck me. Wow. I can't get on the right side of a trend today. I need it to fail here. If it can take out 800, I have a fighting shot. But is it just going to keep holding VWAP? VWAP is the white dash line, the volume weighted average price. Oh, this doesn't feel like it's my day. I feel like I'm taking reasonable shots, but it's just, when you take reasonable shots and you get unfortunate and they're not going your way, and then there's large sizes, it's adding up. It's adding up so quick. Come on. What is this low? 07. Come on, get rejected. Just smack it right at VWAP. Take out 800. Let's just stay below 800. Below 800, I have a decent shot. Nope. Before, when I was telling you, like, I have to survive the bounce off of 700 and it just didn't go well. That's kind of what's happening now, is people are really reacting to this level. And we're also right at the point of control, and we're at VWAP. This is just a key area, and I just need it. Basically, I'm flipping a very expensive quarter. It's either going to crack my way or it's not. I might have got absurdly lucky. It got up to 21. My stop was 22. Is going to flush this. We're right. Look at wick. Dude, we just keep getting to 75 and buyers. Oh, not that one. Buyers just keep stepping in right there. Right back up to fucking 800, dude. There were buyers down here at 740. That's kind of interesting. I wonder if I should move my order there to 740, because that's where we're seeing. Yeah, they were at 740. Now they're at 750. 750. Could do 51. How many times is it going to press on this level? This is just incredible. Wait, look at wick. It just keeps pressing on 75. I feel like if it goes, it's going to go, which it's just, where can I update my risk? I'm not the most comfortable with my risk right now. That bottom one's not my actual target. I was just updating it so the chart looks a little bit better. Dude, it just needs to fucking crack 75. This region 60 to 70, it just keeps finding support. It just blew this guy out. Someone was at 90. Gonna be luck of the draw now, folks. Luck of the fucking draw now. Damn, back to 800 again. This is honestly just getting fucking exhausting at this point. Fuck. Oh, it's not good. Inherently, a failed breakdown by definition is bullish, and that it pushed it, refused to break. What is that? 22. All right, I need to set an alert at 22 on NQ here. What is this? Yeah, 2022. All right, I have an alert set. What was that? All right, I have an alert to go off at 20. Fuck, man. The longer it's hanging out above 800, the longer it's hanging about above VWAP. Not looking so good for me. Not looking the best for me. Lots of painful consolidation. I'm just trying to hold in to a reasonable amount to see if the consolidation breaks in my favor. Oh, I really just needed to, this 10-point region, 760 to 770. I just needed to get below that, but it just keeps like all, look at support, 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 support. There's a lot of support right there. Maybe I get lucky. I'm trying to play the VWAP rejection. I'm trying to play this trend line breakdown. The Qs were pressing it. The SPY was pressing it. I'm trying to play the high from yesterday rejection on the SPY. I'm trying to play the, oh, that's all consolidation. I'm trying to play the fact that the S&P 500 is vomiting. Like, I like the direction I'm on. It's just not going. Which maybe that just means I need to be more patient. I don't know. Oh, I feel like I'm on the right side of this. It's just, I don't want to be too into that thought, because if you're wrong, you might be holding on to a loser longer than you should. So I'm trying to read the writing on the wall here. I'm trying to read the flow of everything. But at the end of the day, price is king, and price is not going my way. Just to clarify, as I normally do, I'm just moving that down there to clean it up a little bit. I'm not really, that's not necessarily my target. I care more about updating my risk. I care. See, look at, like, we just keep tapping this fucking region. And we bounce again. Oh, dude. This is a test of patience today. We're in the fucking blender right now. I feel like my posture is horrible. Do you guys feel like my posture is absolutely fucking horrific? Come on, just fucking crack for me. Nope. How many times can we possibly catch here? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 fucking times. 9 fucking times. And the trend line we're pushing on is like a pretty important one too. Maybe that's why we're having the worst time, because buyers keep coming in there and they're just risking this recent low, which isn't cracking. So like they just keep buying and buying and buying. This is mentally a tough one, because it's going to go one of two ways. It's either going to break my way and everyone's going to be like, Matt, you were so disciplined. You stick to it. And you had the patience to like wait it out. Then if it doesn't go my way after all this, the argument's gonna be like, oh, you were greedy, you were up a little bit, like why didn't you just like take the money while you had it? Why didn't you put your stop to break even? Like, I feel like the judgment of this particular trade is going to be effectively just how does it play out? But in reality, you don't know how it's going to play out. So how do you know if you're being patient and disciplined, or how do you know if you're being greedy? And I would say that the answer there is you simply just fucking don't. I mean, this is just horrible consolidation. We're not fucking going anywhere, man. Look at that. The SPY's dying, and yet price is just going flat. Mag 7 is legitimately just going flat. This is just Jesus. Good thing it's fake money he's trading with. Just another huge loss. Oh my God. I fucking wish. You think I'd be this stressed if it was fake money on the line? So stupid. I would be the best actor in the fucking world if this was my behavior with nothing at risk. Dumb fucking comment. comment from a person who tried trading, has horrifically failed, and now thinks that no one in this world can be a trader because they think that they're God's gift to the world and so fucking smart. Oh, fuck. This is not. I don't get it. How is the SPY getting this hit and price is staying stable? SPY seems to be in the middle of a fair value gap and showing weak resistance at 671. Just my 2 cents. No one gives. Fair value gaps are the dumbest fucking thing ever. I don't know how so many people have been buffaloed into thinking that fair value gaps are like a useful indication of the market. For the thousands and thousands and thousands of people who think it's useful, why have only a handful actually made money? Like, the odds are just so bad. Do you know how bad a system has to be if there's thousands of people using it and then yet only a couple of them are making money? It doesn't. It doesn't. Literally, it just doesn't pass the basic, like, thought test here. Are we doing anything? When I go even out to the 5 minute, we're just fucking range bound like no other. You pay $397 for 150K fake money. It says so on Apex. Sweet Art World. Quick question. Are you fucking retarded? So stupid. I love all these broke motherfuckers who don't know how to trade coming in with like a gotcha. Oh, that you got me. You proved me wrong. You got me. Fair value gap, is that an ICT style trade? Yeah, it's exactly something you shouldn't be doing because guess who's never made money ever in their trading career? ICT. Guess who's never ever made a fucking profitable year or quarter, has never won a trading challenge? ICT. The fact that people listen to him, a guy who has never had like a modicum of success, blows my fucking mind. Well, doesn't seem like shit's happening right now. The market keeps saving itself somehow, some way. Well, folks, shout out to Public. Download that app, free to download, free to sign up, free for you to check out. In my opinion, best place to really be trading options. TradingView, this is the Black Friday deal. It's the best deal of the entire year. The link is in the description of the video. You have 3 days left. And right now, the best SIM to funded offer is TPT. Use that code Goonie. Folks, that's what I have for you. I'm going to go watch this fucking paint dry one way or another. We're going to see how this either goes or doesn't go. I don't know what I'm doing. It's uncanny, the mismatch between price and options flow today. So I just basically have to sit back and wait for some sort of like realignment, but you can't be fighting the trend. And when the trend is all wonky and doesn't make sense, well, the only clear option is to literally do nothing. So that's what my plan is going to be. I'm going to sit back and maybe if something aligns, maybe I could get on the right side of it. Other than that, I have to just accept my manageable loss on the day, and we're going to see how things turn out. We will be posting an update video later on today, and then we're going to be streaming once again tomorrow morning. Yes, there are still things going down today and tomorrow. I'm expecting a lot of movement. Most years, this particular week is a bunch of nothing, a bunch of boringness, a bunch of nada. This time around, you can already see that it's pretty crazy, and I expect the remainder of the day and also tomorrow to be just like as nutty, as crazy. So please be prepared, respect your size, respect your leverage. Don't let things get out of control. That's what I have for you. Update video coming out later tomorrow or today, and then streaming once again 9 a.m. tomorrow. I hope to see you guys there. And remember, shout out to Public. Check them out. Pinned to the top of chat in the description of the video. Best of luck. I hope you crush it. Thanks for all the good vibes. Peace.